All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 9:01 Eastern Standard Time, Monday, May 16th. Thank you so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. If you want to join us in the future, bottom right-hand corner of your screen, little white logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit that thumbs up button if you like these videos. Thanks again, as always, for the support. Let's rock and roll. The Dow is down about 10 points. We had a little bit of a pop about 5 minutes ago. Nasdaq's down about 0.18, S&P down 0.19, Russell down 0.17. Again, not much going on. Down about a quarter point on crude, $110 a barrel. Gasoline futures continue to grind higher, above $4 on the futures side, 1.27%. Gold futures literally flat, 1808 an ounce, down 0.75% on the 10-year yield, 2.913% is the yield. 104.40 for the dollar index, down 0.15%. The VIX is up 0.76% at 2909. Again, so still elevated at near that 30 level. Euro dollar 22 pips to the upside, 104.27. 129.27 for the dollar yen. Bitcoin did break 31,000 over the weekend, but kind of slid back down now. We're at 29,940 on the future side, 2,034 for Ethereum on the future side this morning. Okay, let's go ahead and kind of break things down here. I was fixing up the last part of this report that I was working on for Investment Club on some stocks that I'm watching. So let's take a look at S&P futures. Good way to start. Happy Monday. You see that yellow line here? That's really your next level of support. So that's right at 39.48. So again, we're going to keep that in mind. And why am I looking at this? Why are we looking at this 1-hour chart, Carlos? Who cares? Well, guys, we may have a bear market rally in our hands. You may say, oh, the worst is over. No, what we have here, and again, I'm only using the ovals because I don't have the underuse. But what does this kind of look like to you guys? What does that look like to you? Now, before you tell me it's Mickey Mouse, it's not. Looks like, yes, the good old inverse head and shoulders. Looks like we're setting it up. I was looking to see if we retest 39.50. If we do retest 39.50, guess what? This would be considered a complete shoulder pattern. It would be your right shoulder. So your right shoulder, your left shoulder, and your head here. Usually when we inverse this, when we put this regular head and shoulders, that's usually a bearish trend or a bearish setup. But when we have an inverse one, that's usually a bullish setup. Now, before we start popping champagne and getting too excited, let's see what we got to do with that inverse head and shoulders first. Keep in mind that did we really set up that right shoulder? So it's not perfect. It always doesn't have to be an exact perfect setup. But again, it's pretty similar. So 40.50 really needs to be on your radar. Why does 40.50 need to be on your radar? Well, because that would be your breakout point. Now, the problem is that you do have the 200-day right ahead of you at 40.58. If we do break that, I definitely want to go long and see if we can get to 41.01. 41.01 will be your next level of resistance. 41.60 would be next. And again, depending on how much of a bear market rally we have, we could definitely get back to around 4,200 without a problem. That'll just get us back to May levels, earlier of May. That's basically where we get into. So I do expect a little bit of a relief bounce here. Would I be going out buying stocks here? No, but I would be playing calls here. So when it comes to calls, I'm really looking at, again, look at the downtrend. We're still downward. Even though we're going to get a little bit of a pop possibly on this inverse head and shoulders, it's still a downward trend. So again, if you are trading options, when you're doing calls, more likely they're going to be scalps. 20, 25% gain, get the hell out of them. And then when it comes to puts, I'm okay with going full 35, 40% return on those options because it's still a downtrend. So again, keep in mind, we may get a little bit of a rally. Again, not a bad thing. I'm as bullish as anyone gets. Everyone knows me. I love green days. But again, we're going to have to make sure and keep an understanding. Zoom it out a little bit. You see that we still have a little more of a downtrend. So again, 40.50 is the key. Take a look at 10-year yields. Not really moving, right? Filled most gaps. There is a gap down here to around 28.52. Even the VIX filled that gap. Looks there, just filled that gap. We do still have that trend line to the upside on VIX. Nothing has really changed. Liquidity is very poor out there in terms of S&P futures. But again, you can still trade it. But again, it is very light trading out there. So may not be the best bid ask sometimes. See if you can get a good spread on any trades that you do. But keep in mind, not a lot going right now. Not a lot. Even crude is kind of just moving sideways here, kind of consolidating. Again, we had that news from China overnight that their retail sales wasn't as great. And you can see that crude oil is kind of hovering around that 110 level. But refined gasoline, transporting it and all that costs money. So crude oil definitely putting a dent or hurting the market too, as you see gasoline all-time highs. So again, we do understand that we do get spikes. That's normal. Then we usually get mean reversion, as we saw here on crude. So maybe a little bit of a lag on crude to gas in terms of charts. But again, we got that spike, 130.50, and then we faded back all the way down to around 93 and kind of been consolidating within a range of around 110, $100. Not really worth trading in terms of futures. But yeah, on the macro environment, yields are coming down a little bit. I am watching TLT, which are the 10-year yields, 10-year bonds. Let's see if we can break above 119 again. That'd be a key level to break. I do own TLT, and then 122 would be the next big level on the hourly. That gets you right back to where my previous Fibonacci retracement level was. Imagine that. That's how much bonds have fallen. So again, mean reversion goes both ways. Let's answer some questions here. John says, good morning. Thoughts on Apple this week? We do have a couple of Fed speakers today. This week, obviously, I did went over the S&P inverse head and shoulders. I am looking at possibly on Apple. I wouldn't want to go long here just yet. I want to break this 100-day moving average of about $150.41 so I could play calls, the 152.50s or the 155s. Right here, you could go, oh, well, Carlos, if we break 148, I can go for the 150s. Sure. Again, if we get a settled hourly candle, possibly go to 150. Yes. But I would wait a little bit and see if we can get to 151, 150.34 and break that 100. A break of 142.47, we'll get back downside action to around 138. That's pretty much your levels. And happy Monday, RT. Let's get it today. Not a lot of action, though. Not a lot of action. So what I would look at, again, is a possible, again, just a possible inverse head and shoulders. That's what I'm watching today. 40.50, nothing has broken. Until that's broke, nothing to do here, guys. Again, and your other level here is this 39.50 level. I'd probably be a buyer here, see if we can get a bounce here with a short stop. If we break above here, or if we start testing 40.42, I may want to short here and see if we can get back to 39.78. Just really depends on the breadth of the market, advanced decliners, and the volume, which is not much going because it is still the futures overnight. We're not open yet. We still got 22 minutes left. All right, guys, I'll leave it there. Have a great rest of your morning. I will catch you guys later for the aftermarket recap. Cheers.